It's about that time of day again. Welcome to your nightly newsletter, boys and girls. My name is Joseph James. It's Wednesday evening, February 25th, 2015, the 25th day of this second month of the year 2015, cranking through the final few days of February. We survived Miss Janet Yellen. We survived a wacky Wednesday, definitely on the wacky side with inventories today on crude oil. In tonight's newsletter, crude oil is bearish. Yeah, it's still bearish. I'm going to show you why. But those buyers definitely took it higher late in the session today, which is perfect for us to get a better price to sell it back to $50 a barrel tomorrow. Now, we should see price go a little bit higher overnight on the black gold, but we will be waiting like a predator for those buyers to fail up at these highs so we can sell it right back down. How about gold? Gold is bearish this evening, but we see big clues that suggest this price just might go higher before we can cash that paycheck on that big short that we called from last night's newsletter down at $1,200 an ounce on Thursday. So hold tight on gold. And how about the mighty mini Russell? Boy, those E-minis, all-time highs right now. Difficult to say it's anything but bullish right now. Russell's bullish. And the third day in a row, we see volume confirming this move. 3 days in a row on the Russell. We have a very obvious trading range on the Russell going into tomorrow. So we've got one focus, and that are range breakouts on the Russell for tomorrow. As you can see, we have a fantastic jam-packed newsletter for you guys and gals this evening. But before we begin, I want to make sure to remind you, make sure you're watching this video over here on our trading blog at sidewaysmarkets.com. If you're watching the video on our YouTube page right now, there's a link right below that video that will take you over to our trading blog. 3 reasons why you should be watching this video over at sidewaysmarkets.com. The first reason is you can download all my charts. All the charts I'm going to give you guys tonight in the video, you can download those and use them on your own time tomorrow. Second thing, upper left-hand corner, maybe you're wondering what all the commotion's about. Maybe you're wondering how we became the longest-running, most successful trading community on the planet. Maybe you're curious what it feels like to be in our trade room. Maybe you're wondering how we use these newsletter levels every day to make a profit. I'm going to send you a free pass. If you're not a member yet of School of Trade and you'd like to get a trial of our trade room, grab that free pass in the upper left-hand corner. Third thing, right above my ugly mug, lower left-hand corner, I have a nightly newsletter mailing list, and I would love to send you an email every evening when my nightly newsletter is published, right around 8 p.m. Eastern Time, give or take a few ticks. And so all I need is your name and your email address, and I'll shoot you an email every evening, let you know the newsletter is ready to be watched. So 3 things here on my blog. First of all, download the charts. Second, grab your free pass. Come out and see me this week in the trade room as a guest. And of course, register for your newsletter mailing list. If you register for the mailing list or you grab your free pass, don't forget I'm going to send you a verification email to make sure you're not a robot, make sure I got your right email address, and to make sure you give me approval to keep sending you emails. And make sure you check your junk, your spam, and whatever other folders you might have out there in case you don't get the verification email. Capiche? All right, let's jump right in. Russell. I know, difficult to, you can't really complain about this. You can't really argue with it. We're definitely bullish. We retested, boy, we really nailed this stuff last night in the newsletter. All 3 markets, we really nailed all 3 of them. Go back and watch last night's newsletter if you didn't catch it. You'll see what I'm talking about. Here was one of them though. Gave you guys that buy at these lows last night, all the way up to the highs. That was our number 1 trade here coming in today, was to buy that low, and our first target was up at that high. Now, of course, we really have a nice tasty set of targets waiting for us. And if you remember back on Monday this week when we were down here, right? Remember I told you guys, be ready for that 43 to 45 target overhead here today or this week, right? Maybe we get to this week, maybe it's early next week, but at this point it looks like as long as we keep getting this volume confirmation, we just keep chugging along here, keep moving to these new all-time highs. So we retested this range high today. We retested the range highs in today's session. We see volume confirming, right? Line up the highs. You can see We pretty much have a double top in the price, but you can see, though, we've got volume definitely screaming at us. Everybody sees a lot of value in these higher highs right now. So we're definitely bullish on the Russell. Our plan is to buy support levels on the next pullback. Buy support levels on the next pullback, or to enter with new highs above the 35.8. Okay, so here's what I see on the Russell right now. Obvious trading range. Triple bottom, double top, but the volume tells us, though, to keep being a buyer, right? The volume confirms the bulls are still here, if we couldn't tell it already. The point being, though, right now, when you see a trading range like this, you should immediately be thinking, what's my trend? Trend is to buy, and how can I capitalize on buying around the edges of this range? So let's follow the bouncing ball. What if price goes lower? Price goes lower, breakout, trap. Price goes higher, breakout, pullback. Very, very simple. Okay, so as we go lower, we've got some juicy spots down here. Look at this range expansion target down here at that, we'll call it 1221 or so, give or take a few ticks there. But if we do happen to see kind of a mass exodus, a profit taking, this is a crazy world we live in. If we do happen to see price take off here, that would be your juicy, juicy buy opportunity there down around that 1221, right? That's the range expansion. Take that range, copy and paste it. Take that range, copy and paste it, right? So that's pretty much what we're looking for. If we go lower, we buy it. If we go higher, just remember, do not buy those highs. Professional traders do not buy the highs. We wait for some other poor sucker to buy the highs. And, maybe that poor sucker ends up being a profitable poor sucker, right? Maybe it does successfully break out. But what we're worried about is what we saw right here, right? We're worried about having it go up, trapping me into the long side, stopping me out just to have it keep going higher. So wait for it to breakout pullback, and then again, you got targets waiting for you here, guys, on the way up tomorrow. All right? Whatever you do, do not buy the high. Okay? Buy on the pullback. That's the only real concern that I see here right now. And again, don't abandon ship if we come off these highs and get into that 1225, 1224 area tomorrow, because remember, it's just giving us a better entry price for our buys. Let's keep moving. From the Russell anchor chart to our Russell price action chart, got a lot of the same stuff here, but I want to show you a very important trap. There's definitely some traps on this chart, and I want to help you kind of avoid losing money here tomorrow. So Russell price action is bullish. We're trading inside this obvious range, right? We talked about that earlier, so which tells us to be careful of the fake out breakouts at the highs and the lows, right? You got to remember, prices often try to break out and fail the first time, right? Failure. This one didn't quite get there, but again, look to buy that low, sell that high, buy that low, sell that high. I, of course, recommend that we buy at the lows instead of selling at the highs because of the trend. But what I want you to be aware here is, and this complements what I said in the last chart, and that is just be careful buying this high right here. And the reason I say that is because you get a definite measured move. It's going to just barely poke its head out of here, 1236.8. Kind of the same thing we saw on crude oil today, but the opposite direction, right? Remember crude? Crude had this bear trap, and it did exactly that, right? Same kind of thing. So what I would expect to happen is I'd expect it to go up to the high, hit that measured move target, stop out all the buyers, and this is where it's going to get fun. This is where it should get a little bit twitchy up here. It's going to go up, pull back, stop out all those buyers who jumped in too early, get some sellers going on it, and then take off to the upside, right? We call that the old okie doke, right? Okie doke, we'll see you later. It's basically a double stop run, right? It's a double fake break. It's going to take you out to the upside, right, and then make you cry as it comes back down. And then once you sell it back down, it'll make you wish you would have stuck to the long side, right? You know that's how it's probably going to play out tomorrow if we run to this high. Now, maybe I'm wrong. I'm wrong probably more than I'm right these days, right? Look, the good part is that when I'm right, I make a lot more money than when I'm wrong. So we know that it may just blow right through it. And if it blows right through that measured move target, then you got, again, the breakout pullback, right? So no, the bottom line is do not buy the high, right? I think that's consensus here. And then if we happen to go lower, right? If we happen to go lower here, you're going to see the same thing down at these lows, right? You're going to have some unsuspecting victims here that are not going to be aware of this channel low. You're going to have some folks here that are, for whatever reason, going to try to sell this low. I have no idea why they would do that, but obviously that's how I make a lot of my money in these things, is expecting these folks to do that. And so what you can expect to have happen is to have it go lower, go back in, try again, and then bam, right? So again, be patient to buy that low. Do not sell that low. And if we happen to blow right through it, you've got a little buy opportunity there at 1224.8. Again, I'm staying on the buy side right now. Just don't buy those stinking highs, right? Just don't buy the highs. Buy it on a pullback if you're going to buy those highs. Alrighty, let's keep moving here from the mighty Russell over to that funny yellow metal they call gold futures. Gold is bearish. And this was just classic here today. I mean, we talked about this last night, right? I mean, it gave you guys the exact same level. It's a little bit different. I think it was a little bit lower here. But we got the sell off that high. And now we're waiting for that 1200 target, right? We called it the yelling target last night. Well, we're yelling at something here right now. And I think we're probably going to go higher here before we go lower. And ultimately, the reason I say that, the big reason for it is because we didn't get there already today. What the heck's up with that? How on earth do we get to what, 1201, something like that? What is this? Yeah, 1201? We go within 10 ticks of 1200 and we just pull a U-turn? Okay, something's up, right? Not your typical price action. Don't bail on this short just yet. Don't bail on the short just yet. Let's not go crazy here. But we get exactly what we had expected today, right? We really did. And we've been doing this all week, right? Goes lower, buy it at 1200, goes higher, sell it down to 1200. But this is a little spook right there, right? That's a little bit of a spook. That definitely causes me, it smells like smoke. And where there's smoke, there may be some fire. So we're going to investigate some more. So price pushed down, sold it back down. We're waiting for that 1200 target. Now, our plan will continue tomorrow. So keep selling at resistance. But look what we find here. Now we have what appears to be a proven bull channel. And the reason I say that is because why on earth didn't we hit that 1200? I wonder why. So I go out and look for more evidence. And I, of course, naturally gravitate towards drawing or trailing off the highs. And then it doesn't take very much to see, okay, now I see what happened here. So this is why, for whatever reason, there are some bulls out here right now. And honestly, what I would expect to happen is I'd expect them to try to get people back on board at the buy side, run it back up, and then give us another shot to sell this thing back to 1200. Okay, so that's what this chart kind of tells me right now. Bottom line is I'm a bear on gold. We get a strong dollar. We get a really strong economy here in the U.S. The only thing that has been really affecting us this week regarding gold has been a little bit of the ECB news, right, coming out of Europe, but majority of it's been Janet Yellen. She's gone now, right? Not that I don't love my gal Janet Yellen, but I could definitely use some normal price action tomorrow and Friday. So I would expect there to be a little bit of some perkiness here going into tomorrow's session, but again, be patient, wait for those sellers. Now here is a chart. And I talk about this all the time in my trade room with our students here at School of Trade. And as day traders, first of all, not as day traders, as humans, we are hardwired to anticipate. It's a survival tactic, right? Back old couple generations ago, your great grandparents were able to anticipate polio, right? The measles, a saber-toothed tiger chasing after them, right? So the fact that you're actually here breathing, an alive, warm-blooded human means that your ancestors had the ability to anticipate things, right? Back before Google was around, right? So they couldn't Google it back then, so they had to rely on their instincts. So clearly we are evolved species that have some killer instincts to us. But that instinct that we have gets us into trouble as traders, right? And anybody who's been trading for more than, a few hours already knows that feeling you get in your stomach when you've got money in the line and you're trying to trade these financial markets. We talk about this all the time in our trade room. We say what comes natural, what comes easy to a human is usually the polar opposite of what a trader should do, right? It's job security. It's what makes us earn all this money in the markets. That's what it is. So where am I going with this? Well, where I'm going with this is that as a trader, we are hardwired to anticipate. We are. It's in our blood. But you've got to wait for proof. You've got to wait for proof. So now here we are. Here's that proof that I was talking about before. Here's that proof that I think we're going to go higher here before we go lower. And you're going to see it's all going to really revolve around this range and this $1,200 an ounce. So, of course, gold price action on this chart is clearly range bound. We do have a long-term down channel here, which is not really relevant at this time. The range is the most important part of this chart. So the trading range and this bull flag, see the bull flag right here? Right? This is one of the kind of structural patterns. It's not really a trading pattern. It's just it's information that we're going to use to understand the structure of the market. Right? This personally is called a flag. Okay, and it's really marked by that straight line up, and then this very obvious parallel, just almost perfect symmetrical bear channel. What makes a flag so tricky is that it just kind of ropes you in to think that you're bearish right now, right? That's kind of what makes it so tricky. And you ultimately want to be buying the lows of this, and eventually we're going to push higher. Basically, when you see a bull flag like this, you know that one of two scenarios are likely going to happen. As we pull back, we are either A, going to run back to those highs, or B, the flag will break and we'll tumble back to where the flag began. It's just like a spike in channel or a pennant or any of those types of patterns. So we know right now that we have scenario one is that we go back to the high before we come back down. That's, of course, why I'm saying this right now. But I'm also going to tell you right now, though, that if for some reason we fail, just be aware it's probably going to blow right past that 1200 and head right back to this 92.5 area. Now, we'll definitely take some profit off at 1200 because you'd be a fool not to, but we definitely want to hold on to a position here, just a little bit of it, to see if we can get down to that range low. On top of this flag pattern, that again, if it's successful, will go higher. If it's unsuccessful, will go lower. On top of that is this trading range. And guys, we know that when we break out of a range and then come back in, it's very likely we go the entire range. Many of you have probably heard of what we call the 80% rule on market profile, right? Or profile charts. And that would be when we leave a range and come back into the range, usually we explore the entire range. So this all just starts piling right up now. Now all these clues, all this proof starts to fire off. So scenario one, back up here, we've got one more. Now if you're a member of mine, you know how to read price action. And if you're a member of mine right now, you're probably going, Joe, don't forget to talk about the two try. Yeah. So here we go. So we have, again, we talk about the bull flag. Okay, the bull flag's pretty obvious. But if you notice here, there's a symmetrical move. You know me, I love measured moves. Measured move right where it pulled off. Remember we were wondering earlier, why didn't it get to 1200? Well, there's your proof. There's the reason why. Human beings love to do things in twos. Think about it, right? Try twice, give up, go the opposite direction. So we know that there's likelihood here with that measured move lower, stalling out just before 1200, holding the highs of that range. There's a good chance here this flag, as well as the measured move, pushes us possibly all the way up to this 1213 before we get a chance to bring it back down tomorrow. Now remember, there's always an opportunity for a failure. If I'm confident the buyers are going to give this thing one more try to run this up, and they don't, now that tells me, so basically what I'm talking about is I'm thinking as we go higher here, if I see some pullbacks fail, Just be careful selling into the 1202. But that's an easy short. And again, we're trying to hold this thing all the way down to that bull flag low. So if we get short off these highs, target at 1202, target at 1200, and then the big fat pay me my money target at 92.5. And I don't think we get there tomorrow, but this would be where you'd expect to end up later on that week, the range expansion to the downside. Okay? So look for the buyers to retest up high at that 1210, maybe 1213. Be patient. Okay? Be patient up there, and then look to sell it right back down. That's my plan for the old yellow metal. Now, looking forward here on the crude. Boy, crude was well, I mean, we couldn't have called it any better. There was really no way to do it any better from last night's newsletter, right? We called the fake break this morning. There was the fake break back to 50, down to the low, fake break at the lows, back up. I mean, this is exactly what we talked about in last night's newsletter. I mean, it's almost exactly what we had projected 24 hours ago. Okay, we're no stranger to being pretty darn accurate on this newsletter. Now, I almost drew this out to be an inverted triangle or a megaphone, right? You definitely could, right? You could definitely say this is a megaphone. And what do we know about a megaphone pattern? Get ready for some insane volatility, because when you've got lower lows and higher highs, boy, oh boy, right? Mom and dad are away for the weekend. It's time to party, right? That is what it feels like when you get a megaphone pattern. So crude oil, again, I'm not going to back off the bearishness. Remember what I always say. Anybody can put together a one-day move, but can you hold it on the pullback? That's the key right now for these buyers. Anybody can put together an afternoon push, but can you hold it after a pullback? If we can hold these highs, 50.48, we're fine to keep going higher. But that's a big challenge here. That's going to be a big challenge for these buyers to hold these highs. And the next chart I'm going to show you is going to give me that proof. So look for buyers to fail at these highs and get ready for selling opportunities back to that $50 a barrel, that target we've been using all week. Okay, so it's got a little bit more room to go, but you get a measured move target, 1, 2, measured move. You've got a resistance overhead, and then, of course, take that trading range, project it up, take that trading range, project it down. You get a nice, tasty sell up here around $52 a barrel for that range expansion. I want to show you some more, though, here before we wrap up on the crude, though. But we're on the same page, though, right? We've broken out of this range. This is just screaming at us for a breakout trap right now. The key is we know the trend is down. We go into this range. We break out, up into resistance, bring her right back down. It's a classic breakout trap or breakout fade in this case. Let's keep moving, though. The next chart is one that's definitely going to give you a lot more information. Okay, let's take a look at this one for a second. I don't like it up there. Let's get this down here. There we go. All right, first of all, crude oil price action, definitely range bound. Okay, on this chart, we can see it's really nothing more than kind of rotating between range here, goes down, range here, goes up, range here, goes down. Okay, so we'll expect these ranges to continue. Now, very interesting how we're kind of frothing around here, right? Kind of bubbling up around here. So you can definitely tell the bulls are there, but they're not able to hold it above that 5107. Because remember, if we get back above that 5107, there's a good chance that we could run it all the way up to the top of that range. Just like if we come back down, there's a chance that we go all the way back to the opposite side of that range, right? It's called price exploration, okay? It's all part of the auction process of the financial markets. So we're range bound. We get exactly what we expected, right? A bear trap at the lows, that fake break going back to 50 this morning. This was that one I was talking about, right? Up, sell it, stop you out, and then go. It was just a riot to watch it this morning. I'm going, man, this is exactly what we thought was going to happen. And then we've got the bear trap down at those lows. It was classic. Classic crude oil. Classic every market. This is not just crude oil. This is how markets work when they're range bound like this. So we expect the buyers to try once more possibly up to that 51.46, up to that 52.04 before the price comes right back down. Here's why. Here's why. Now again, you'll notice this measured move, AB up to CD. So usually we're going to find a way to finagle ourselves up to that 51.46. So do not be surprised if we hit that 51.46. Let's call it 51.50, right, before we come back down. So I'm pretty much expecting that to happen. Now, if I come back tomorrow morning, get back to my desk at 7 a.m. Eastern time, if we're moving lower, hop into this thing as soon as you can, because it's going to be a bear, and we're probably going to retest those lows here tomorrow if we haven't pushed higher overnight. Okay, you know how this goes, right? Crazy stuff happens as Asia and London opens up right now on these markets. So we'll come in and we'll take a gander at this tomorrow morning. Now, if you're a member of mine, you also know how to read price action, and in addition to that measured move, you're seeing also a channel here. And you'll notice that they just pulled back and broke the low of that channel. We did successfully retest those highs. So that tells me the bulls are here. And again, if you're a member here at School of Trade, you know exactly why I'm saying that, right? I teach it to you guys in our price action cycle in the advanced course. So what's our plan? Our plan is pretty much the same as it was before. Look for a failed breakout pullback. Okay, so here's some options for us. Let's play the game, what if price goes higher? What if price goes lower? What if price goes sideways? If price goes higher, I'm looking for those buyers to try and fail so I can sell it. If price goes higher, I'm looking to sell. If price goes higher, I'm looking to sell. If price goes sideways here, this becomes a trading range. I'll look for a fake break to sell. I'll look for a breakout retrace to sell. If we go sideways, mark up the highs, mark up the lows, and treat it like any other trading range. Look for that fake out breakout to the upside and sell it back down. Or look for the breakout pullback or retrace and sell it back down if it goes sideways. If it goes lower, here's the best way to trade it if it goes lower, because you're going to run right into this 50.41. This 50.41 is going to be a really tasty area for buyers for good reason. This is a breakout pullback. So what you're looking for here now is you're expecting it. If it goes lower, you know there's going to be some buyers here that are going to get involved at 50.41. Right? Maybe it goes as high as 50.60, 50.70, but then I'm looking here for it to slow down and then reverse. And once we get that failure here, see ya, suckers. We got $50 a barrel in our crosshair. We've got $49 a barrel in our crosshair. And again, this brings us back to that bear trap. Again, if price goes higher, stay patient, wait for those buyers to fail, and bring it back down. If price goes lower, be patient. Wait for those buyers to take the bait at 50.41. Maybe they run it back up to 51, but be ready for those buyers to fail at 50.41. That's going to be the easiest way to sell it, is when the buyers try and strike out, right? And guys, if you don't know what I'm referring to when I say wait for the buyers to try and fail, I want to remind you to come out and join me, right? Get educated. These markets are all the same. They are. They may have different personalities, they may have different cost per tick, they may have different prices, but they're all the exact same thing in the sense of they're nothing more than a group of human beings. One human being is difficult to predict, but you put a group of them together and all of a sudden they are very, very consistent. And in the words of chaos theory, they are consistently inconsistent, right? And it makes it easy for us as long as you know what you're looking for. Guys, I want to thank you so much, as always, for being a part of our newsletter tonight. I want to remind you guys to download your free pass, grab your free pass, register for the newsletter list, download today's charts, and don't forget, hop over here to SchoolOfTrade.com, and you've got 3 levels of membership. We teach our students live in real time every single day in our trade room. That's right. You don't have to do this on your own. We offer 3 levels of membership. We offer lifetime memberships and ongoing. We're the fastest growing community of traders online by a long shot. And guys, don't forget, we have the best free trial in the business. I will prove it to you just how much we can help you guys out. 1 week with me on that free trial, you're going to learn more in 1 week with me than you've learned anywhere else on the web. I don't care how much you've spent, and I'll prove it to you. Don't forget, I got someone standing by here 24/7, 365 if you should have some questions for us. And guys, shall we do it again one more time tomorrow? Yeah, I think that sounds like a good idea, right? Monday through Thursday evening, 8 p.m. Eastern Time. We'll wrap it up here tomorrow, and we'll wrap up the month of February tomorrow. All right? Same time, same place. Guys, be well. Be nice to each other out there. Make sure you're on the right side of the market tomorrow. And I will see you guys and gals tomorrow. Adios, amigos. Bye-bye for now.